Good morning. May not be such a good one for some. More accidents happening. We knew they were coming, and they're here. And the odds are it's going to get worse, but then it gets better. So, bull sandwich. I was pointing this out. We have different continuation patterns. Why? Because sometimes one doesn't follow through and it develops in a different way. And so this bar formed last week, right? And the topping tail bar that took out the high. So you get an initial move down, you get an attempt to turn that fails, and then it continues lower. That's a pretty good one, basic one. And then we have what happened yesterday, where it held this minor support and prices rally back up. Reason, who knows, who cares? We're technical traders, kind of interested in why, but it happens, but it didn't negate the bar. And now today's not done, but it started up here and, well, the bar's not closed, right? It's still the morning. You can see the trend, the overnight trend on the 5-minute and on the 15, and it's near yesterday's low, prior low. So from an intraday perspective, we've got a climactic type of a buy setup at an area of a prior turn. The assumption is it's going to hold there or attempt to hold, and it did. Technically, that's what I say, look to the left, pop back up again. If you're short, you better take your money. And now what's it going to do? Sideways for a while, try and turn back up, or next leg back down. But right now, it appears that it'll be more likely that, it's either going to just chop around here at the open for a little while, maybe see if it can muster some buyers to take it a little higher, maybe on a retest. But if it closes like this, that would be our bull sandwich, short under this bar's low, looking for it to come down to the next level, which is down here. It should slice through the 50 MA after these bars. Again, if it closes this way, we'll have to see where it closes, but I wanted to show that pattern. So what it also means as we go to spiders and SPX is that it's going to gap down. We'll see where it is, still 25 minutes to go to the open. But where it is right now, it's going to gap down near the green bar's low. So from a gap perspective, of course, that is bearish, because now longs, whoever went long on this pattern thinking, oh, maybe it can come up here and tag that topping tail of the 20 MA, is now scorched, right? In pain. And hopefully they're share sized appropriately so that it's not devastating. But look, this is the pattern. And as an overnight, someone holding it overnight had no way to get out in the middle of the night, where someone doing futures could have said, hey, you know what, in the middle of that bar, something's going wrong. I've got a stop loss in, calculated, risk, blah, blah, blah. And they're out. The swing trader that traded against the trend thinking, oh, I'll get a pop up. Now they're, caught. We'll see how that plays out. So looking at the spiders, see the same overnight pattern, doesn't look exactly the same. I don't know what that whip is, probably a bad tick, but you can see overall the picture is the same. And so now it's going to open down here near the bottom of the red bar. Same scenario, support, but it's gapping down from the day chart and gapping under a red bar. Really kind of a weird looking pattern when you look at it from the SPY without the overnight data. The big red bar, the gap, the relatively, I guess, neutral to bullish close into the open of SPY. And so looking like, oh, maybe it could go up a bit, or maybe it would just rattle around and then roll over again. Patterns can set up in endless ways. And so a bull or bear sandwich is or just a regular continuation pattern topping tail that we looked at, it's historically a relatively common one, whereas things like this and then a gap under it isn't. And news driven, kind of, erratic, uncertainty, craziness, call it whatever you want. It's just not your typical historical pattern that plays out. So, gapping down here under this bar, bearish, traders are caught. It'll, I suppose, go down there, and it's already starting to retest the overnight low right there. And a lot of times this takes it out, and then we see if it begins to try and stabilize or not. But as this develops, becomes more and more obvious to the majorities that this market is going through a correction. Right? Back here, we started saying something's up, right, based on our internals. And we sat for a while wondering, you think this is going to play out? Correcting in what way? So when we think correction, most of the time we think, price correction lower, but sometimes they go sideways, and it was starting to develop that way, like it might, but now it's not. So I think this level here where this unfilled gap is, and ultimately down here at this major support level, would be a probable level where it needs to go. And, it's interesting how the news starts to develop now today. There was some China slowing down. All of a sudden, the news just starts to play out at the right time. So China concerns, financial concerns, whatever, banks, and all of those things, they're going to play on our mind, so to speak, because when the turn begins to happen, wherever it is, here or here, our internals are going to line up, and we're going to have to just wait for the pattern to develop. Robert's asked me, Greg, so maybe the price correction not as harsh since it did not go sideways with a little time correction. Well, this is a time correction, Robert. It had this gap reversal day last Thursday, but the bigger the patterns, for example, if we had a head and shoulders top that played out over the course of a month and a half, that would be much more bearish than something that played out over the course of 2 weeks. So really, it's common sense. Let me back that up a little bit, because whatever we see, it draws our beliefs toward what we see, right? But we always have to be open-minded to other possibilities, meaning I've seen head and shoulders tops develop and they get negated. And if all of these patterns played out as they have in the past, we wouldn't need a stop loss. So while we see what we see and we have to accept what we see as reality right now, we always have the other part of our trading plan or thought process that says, hey, here's a big red bar. And for example, here's a big ugly red bar. If it stays in the lower half, that's bearish and supporting, it's going to go lower. Now, yesterday, it didn't stay in the lower half. It actually closed in the upper 3/4. And it's like, all right, it's not negating this, but theoretically, that shouldn't have happened. So if it goes above here, it's becoming a larger pattern that I don't know what it is. It's got to develop further, whether I believe this becomes a bigger sideways pattern that'll eventually roll over. Will it make new highs? But now that it's gapping down, we've got confirmation of what started here and this bar. So as technical traders, we want to see patterns, and as humans, we want to feel secure about what we see, that it's going to happen the same way every time, and it doesn't. So you have to have that mindset of, well, if this, then that, but if that doesn't happen, then this happens. You better get the hell out of the way or change your belief system. You get it? So I wish I could explain something to be like, when you see this, bet the farm, but that's not reality. All right, let me finish with SPX here. I won't take too long. All right, so SPX, it's going to gap down here below that bar's low, right? Yeah, 45 call spread. Jake's saying 425, 45, 25, 45, 55. Sure. Yeah. So here's the upper strike. And I was reading what Jake is saying in YouTube. And so if I duplicate this, so everybody, most of you in the green room know what that means, right? The call spread. And so 20 wide call spread for today. And so opening here, it would have to travel a long way. And the down premium is here. Can it get down there today? That would be a big move, but considering the gap down, maybe. But that would be a pretty big move down there. And it's on minor support. All right. Let me speed it up here. So you got a little kind of bull sandwich, right? Bearish bar, tries to flip up, bullish bar. And this is something Dan coined about 25 years ago. He was hungry one day and said, oh, it was lunchtime. He says, oh, that's a bull sandwich. And maybe he went to the local deli down there. And so green, red, engulfing, whatever. If it closes like that, it probably tags the 50 MA and then goes lower. So it's on support as we speak. So you see the bottoming tails down there on the hourly chart, and buyers stepping up again. And now if it can't rally at the open and it goes sideways here, that leads us to believe it's going to go lower. Now look at the weekly chart. Right. So what were these jiggles that happen intraday and day to day? Right. That still in an uptrend, but this support level here is where it really starts to get interesting. If this breaks below that support level there on the daily, and you can see on the weekly, all of this congestion, that's a month long. And that's where it starts to get ugly. And those that are bullish start to really get their confidence shaken. Now, we don't know, how far this will go, but, I think most people believe, you just hear them talking during a bull market, 3 to 5%, right? And we looked at this the other day. And so down here is almost 6%. And so when you line up a percentage that many are talking about, what a technical pattern, odds are they're going to step up there. So we'll keep that in mind. We'll see how it plays out in the time. Russell got nasty yesterday. Here it's breaking down below support. We've already covered all of the resistance up there. You can see on the weekly time frame. And biotechs were getting pounded. And now look at this. All right. So the regional banks breaking down, and the financials were kind of holding things together yesterday. Now these are gapping down. There's an expression, put a fork in it, it's done. All right. So where's the underpinnings to help it? Yeah. Dan is saying Moody's downgraded 10 banks. It's like, really, all of a sudden? Why didn't you downgrade them a month ago? Right. And, to add to this, take a look at, the dollars popping up, Canada getting shellacked, Australia, dollar getting down, British pound holding up a little better, but reversing. And the euro, kind of a sandwich type of a pattern. We'll see if this begins to break. And if it does, and the dollar, as we talked about last week, starts to continue to rally. You see those dots there? It's gapping up into this area of major resistance, the top of the trading range. So all eyes will be focused on what it does. We spoke about this yesterday. being at the top of a trading range and the reaction to the top of that trading range. Transports, the ETF broke its major support. So as we look at different instruments, what we see is that the markets are beginning to fire on all cylinders on the bearish side. Interesting, interest rates are down a little bit. That probably puts a little bit of a floor under the markets. If this was going up, I think it would be even uglier, but they're moving down. So that does help, but it's moving into a buy zone area. Silver, keep going. Dollars going up. This is going to go down. And gold, hold it up relatively well. So this is what we're talking about sideways at resistance. This is interesting that it's holding up and showing relative strength in the face of that strong dollar. We want to have an alert here. I think I already have an alert there, but let's just confirm that. Yes, I do. I see on my other screen. I have an alert. If it can pop up above there, we're going to want to know. Crude oil, I don't know, holding there, backing off at resistance makes sense, of course. And Bitcoin starting to flip up. So maybe what is it, GTBC, Dan, and ETHE, maybe yeah, block and so on. Yep. We'll take a look at some of those. So all right, so we know what's going on. We'll got probably some stabilization, I think, at the open, how they fell overnight here, and then we'll see what shapes up. But overall, more bearish confirmation and different accidents happening, some ugly ones even this morning. All yours, Dan.
Good morning. Yeah, remember I said the other day when earnings season that the market mood, I call it, has a big effect of how much they punish stocks for missing. And I mentioned the other day, I mentioned yesterday and Friday that it was obvious that things were getting punished to the downside. And that's because, we're bearish now. It's common sense. But in this whole rally up here, other than this pullback, whatever, they were forgiving them. So even a bad gap, that's okay. Everything's bullish. Just buy it. We don't care that you missed and you're extended. So Ether here, I have an alarm. This is the 1, 2, 3, 4. Greg, this looks great. I got an alarm, I think 1140, but that looks great. Mister here, one of the Bitcoin stocks. I was watching it yesterday for put spread, but yeah, that looks great. Raul asking about PEB long yesterday's high. Sure. Yeah, end of day base. Buy setup. Sure. Yep, I'll put it on the list. All right, let me go right to earnings up here. Pelletier, and buy setup, and I like that it's down. So I got an alarm at 18. If it can take out yesterday's high, then it's negating the gap down. Looks great. Para gapping up. No brainer put spread if there's any juice. Hims gapping 922. That's a pro gap. 30-minute high. That a reminder. Ladar, little penny stock here, gapping down. If you like, these little penny stocks, I'm going to set an alarm at 47. IDR. That's a buy setup. I don't know what it got it ripping the other day. Just set an alarm and move on. Beyond Meat. That's a bearish pre-market. It's gapping down here. Could possibly be a day trade down to 12, but down a lot. MBST 266. Possible 30-minute high. We'll come back. AYX, $30 getting whacked. That's medical instruments. I looked yesterday. Chug bottoming pattern had massive premiums. I was thinking of selling the 7.5s yesterday, and someone told me it was playing with fire, so I didn't do it. We did a put spread on this thing though, the 70s. So this is underwater. But we have a put spread. I'll keep an eye on it. UAA, I was trying to sell $7 puts. I did not get filled. Ring, another big old gap. We're short the 34s, where we said we would take assignment because of the bullish weekly monthly. So we'll just sit with that for a little bit. SWKS 108 and change, gapping under here. 30-minute low could be a day trade. 5 and 77, bearish gap, call spread idea, TDC. I see one print here. It looks like a topping pattern. Daily, weekly, monthly, call spread. FSK shows it down a penny. Was up pre-market, but that's strong as can be. I'll set an alarm here, 2045. TDW 5780. That's a bearish gap. That's a big gap. We'll come back. ACM 8460, call spread candidate over that topping tail. CE, no prints. Doe, flat, no interest. Sats. This is the one I said yesterday that the bulls were getting, for some reason, mighty bullish in the earnings. And now that's a deep retracement. Gapping right there. Look, that's an 80% gap down. So that's what we call a bull trap. Thomas Bots. Yeah, I mean, it's down a lot, but it does look lower. XOK, same. So continuation shorts, Thomas, I don't like them with fluid bars like this. Look at the Qs though. I said yesterday it was showing relative strength in the green room, but then I said under these lows is still a short, because then it's negating yesterday's inside bar. So gapping down here to support, bouncing. So let's say hypothetically it just bobbles around in the bottom half of this gap down, meaning from yesterday's close to pre-market low. And then it takes out the lows after 3 p.m. Then I'm okay with that as a short. So you see how these three bars are different than XLK. This I actually have an up alarm. It's a buy setup at the 200. I have an alarm at, I think, 1343. Same with this. I have an alarm. Well, maybe I forget if I do or not. But that's a buy setup. I can't tell where it's opening, but let me set an alarm at 8:32. Roger, it's above the red bar. I always have my alerts early though. S wave 230. All right, that's an ugly gap. We'll come back to you. $19, but a put spread idea. I wouldn't want to buy it, gapping to this prior high, but this is a new low reversal. Put spread on MTW. A DIA, I said yesterday, if it opens flat, then short these lows as a bear 1, 2, 3. My minder shows it down 63 cents, but I don't see any prints. Well, let me just reset my alarm here. I had set it yesterday at 11:15. Yeah, it's just going to go off automatically because the computer's looking at that last print. All right. Lily, this has been holding like a tank. I mean, look at this 20 and 50. It's not retracing. Gapping up to over $500. Amazing. All right, this is one we shorted the 172 $5 wide puts. Now that nice rally. So we will be able, I guarantee with 99% certainty, we'll be able to get out at a nice profit here. So I'm gonna wait like 3 minutes, let the options tighten up a little bit. Actually, I'm gonna bid 20 cents. Just it's a total guess, and see if I get filled. If not, I just invest it. And I'll tell you if I get filled or not. We sold them for like 90, so I think we'll have a nice looking gain there. ZTS. This is one I actually did myself, but I did not post it. I sold the 170s naked, gap into 178. So I should still have a nice profit. I sold them for like $1.15. They're juicing. Duke, gapping over this base. I like Duke. I got D-Dog and ups on the other computer, so I'm gonna put Duke here. Maybe 10-minute high. That start off as a beautiful day trade long, also put spread idea under Friday's low. TDG, $900 stock, but amazingly bullish breakout here. I set an alarm at 9:20. LI, things that rally into earnings far from the 20. It's just my default bias. Call bearish call spreads the next day, 30-minute low. But this one's a bearish gap from a climb. So bulls are getting trapped there again. Yeah, the Roger IFF is a disaster gap, but I'm just going to sit with it, do absolutely nothing until we get more time. Bravo Romeo, sloppy buy setup. We'll come back. Fox A. These will be no-brainer put spreads. Fox A and Fox. WMG gapping up. Another sloppy buy setup. We'll come back. J. A beast. Strong uptrend. BSY. This was another one I said. Bear 1, 2, 3. If it opens flat, short the low. That looks fantastic. In fact, I'm gonna get rid of UPS. Let's watch. That's a fantastic topping pattern. Bear 1, 2, 3, 4. Look kind of an M top looking thing on the weekly price void. Now that is a tier 1 short setup. If it opens flat or slightly up. So hence I just put it in that window. Tech. Sloppy buy setup. I set an alarm 8220. TPG is a mess. I'm going to delete you. NRG. It's bullish consolidation. I see one print up here. We'll come back to you. All right, my TDG alarm went off. All right, so that gapped up. A Walmart up alarm. That was a long from yesterday. I just got filled on UPS. No, I didn't. Wait.
Well, Apple may be a day trade long, based good part of the day in the afternoon. Gapped up above the end of day base on the 5. See if it can make a turn. Not a lot, so an idea.
All right, now I just got filled on you. Wow, look at that UPS reversal. All right, midpoint right now is 15 cents. I had a bid at 20 and got out. So let me tell him get out at 20 or better.